All right, we're back. Let's hit some more committee moves by way of Kevin Simpson. So you trimmed Goldman Sachs, okay? I want to know why. Obviously, the stock's had a great run. Now, maybe it's more than that, or that's the singular reason. But why now?
No, that is the singular reason. Unlike Cisco, which had horrible price action, and we wanted out of the name, the Goldman position has been on fire. It's been on a tear. And we use very careful risk management and a rules-based process. So if we own a position that's doing this well, we'll trim it back to a 5% weighting. So it's nothing more than us taking profit in one of our favorite names. We've owned it for a decade. We believe in it. If the IPO market, mergers and acquisitions, opens up in 2025, the stock's going to do even better.
So you're okay with getting ahead of a capital market, which is still not exactly with the door swung wide open?
100%. I would be a buyer of the stock here. We're sellers because of a risk management and a rules-based process.
It's up 19% year to date. There's been some question this week about financials, right? We've had a little, fits and starts about growth scares and all that kind of stuff, and financials have been in the mix there. Even yields have come down, reflecting that at certain points this week, and financials have suffered too.
We own JP Morgan and we own Goldman, and we feel like they're best of breed, and that's where we want to be. We do expect yields to continue to come down over the next 2 years. So it's
but for the right reasons.
100%.
Okay.
And it's an absolute, we want to maintain quality. I know it's subjective, but we love these names.
Bill, JPM and Bank of America for you?
Yeah, I like the financials from the banking side. As yields come down, I think that they're going to capitalize. Earlier this week, I did cut Morgan Stanley and joined you all to discuss that. So sort of, obviously different reasons, but I'm moving the puck. I would actually add to Bank of America here as I look into next week and kind of get through that Fed meeting potentially. As mentioned in the last segment, I like the financials in year two of a bull market, and I still think there could be some further tailwinds.
Well, let me ask you that. You raise a good question. Would you add to any bank stocks ahead of the meeting? It's like thinking about buying a stock before earnings. Yeah. You're going to buy a stock before the Fed meeting. When we get an outlook, by the way.
Yeah, and I'm not, because I like buying tech on momentum, and I feel very confident in some of the momentum that comes out of earnings reports and money chasing. Sometimes the financials, you're not really going to see that money chasing in financials. So it's not the greatest momentum play. I'd rather feel a bit more certainty going from the Fed and then adding to it after that.
Jimmy, JPM, and Citi.
Yep, and also BlackRock, obviously not a money center bank,
right,
but it will still respond to several of the same factors. Look, there's something to be said for economic growth that is going to increase the loan book of many of these companies. It's also going to decrease delinquencies, which have been rising and have been a problem, have been a concern. So to the extent that the market, at least in financials, has sputtered recently, perhaps on the concerns for credit losses, if you continue to get good growth, ameliorating inflation, and an easing Fed, that should propel all these stocks higher.
It's the non-money center banks that have had this rally that hasn't really gotten talked about all that much over a week. It's not a great period of time or a long period of time enough to give a lot of evidence to a lot of people. But Schwab's up 3%. Your Schwab, Carrie. S&P Global's up 4%. Talk about those.
Yeah, so Schwab has actually been on a move for some months now. It had a little dip, and now it's coming back. But that's the case of cash sorting, meaning depositors wanting more for their money than they were getting. That's almost completed. And so the earnings, I think, have a more sustainable increase over the next several quarters. The market is going up. People are investing more in it. Deposits are growing there. And S&P Global, so that stock, again, has come back, and the chart looks very good right now. We put it up. I think that the idea that interest rates might come down, which has been sort of floating out there for a while, I think that's going to happen at some time in the next 6 months, and that is very good for S&P Global's business, for Moody.
Look at that chart right there. Mid left to upper right. That looks good.